Right, quick look at S&P, and this is a reversal entry trade based on or based against some of the move up in the overnight session. Overnight session, we open right the way down here and then just grind back up, essentially taking back some of this late selling and also starting a bit of a bid up into the open. So we get this grind up, very, very steady, not a great deal of energy. Whenever I see something like this, my thought is always moving towards the potential of a small reversal. Not huge, I'm not saying sell it here and get out down here, but the potential for a bit of a washback, a bit of this buying here, which essentially is basically just people buying higher and higher and higher prices, so getting forced into weaker and weaker positions, to turn, come out and get a small washback. First area to be looking for, 30.47. So that's the trade then to look for. This is on a 15-minute chart. How do you get into this trade? On this chart here, the trend breaks at 62, these highs come in at 61, so you've got 61, 62 area that you're going to want to be trying to execute this trade. However, bring this onto a shorter time frame chart and now you can see a better point to execute. We've sat in this little range up here, 64 3/4, in fact, is now your better entry point. And the way to look at this when you're taking a trade on like this is not get in at 64 3/4 and take your quick scalp and get out at 61. That's the nice easy trade. But the point here is you're trying to play this reversal on a longer time frame chart. You're just using the short time frame to give yourself a better entry point. Just off a 15-minute chart, you're ignoring this drop down here and you're going to try and sell 61. By getting in on the break of 67 3/4, what this means is by the time you get to the point where this market could then develop further towards the downside, you're actually already nearly 4 handles on side now. This gives you more comfort. This allows you to weather these little spikes back up. This is what you're looking for. And so in doing that, you're giving yourself the chance to hold the trade and to make it easier to hold the trade. And you're then also giving yourself the chance to add on at 61. So this is the first move down. We're coming down towards 64 3/4. We're having a little spike back up to 67. So that's after this very initial little flick down here. Whoops. And that very initial little flick down. There we go. And I'll get that ladder back up for you. Takes you down towards 64 and then we get a bounce. What you're looking for now is that on that first move down, it was quite a flick. When we come down in the second time, you want to see much more steady trade. So just here. If we can get some nice steady trade through 64 3/4, that's going to give you the chance to get in. That's going to give you the chance for the move down towards 61. So at the minute, nothing really happening. With a reversal like this, it's not something that's suddenly going to increase in energy and just suddenly start to drop. It's going to be a little bit steadier. You're going to have to wait for more people to start to sell, and the lower it gets, the more people start to sell. The more people who are long start seeing their positions looking a little bit suspect, they become more inclined to exit their trades. So at the moment we're trading 66.5, 66 area. No reason to go diving in to sell. What we then start to see is a little bit of movement down. All the way down though, we're still seeing people buying this back up and the offers are now coming lower and lower and lower. So you trade through 65 1/4. Now 65 goes offered. You're not seeing too much bid back up now. People are buying into the offers, yes, but the offers are able to come back and we're not seeing any kind of wash up. Now you start seeing a little push down. Size comes back on the offer. This could be your chance to sell now. It's not using the size to sell, it's using that steady selling and the inability of people to keep on coming back up. There we saw another 20 and then no continuation. 64, that was the previous low, trades through, and again, trades into a 30 lot, and straight away, offered, back to 67 and 3/4. So we're just getting a little flip back up. You can be nervous here, that's absolutely fine, but we're not trading back above 67 and 3/4 at the moment. So you can still be relatively confident. Still seeing any time there's buying, the offers keep on coming back, the selling keeps on coming in. This is the steady beginning of the trade. Remember, we've not broken the trend yet, we're not below 61 yet. People could still be looking at 61 and thinking, yep, we can still buy it from here. That's the area where we could still get some support, we could still see a wash back. Once you get down there though, and then we start to break 61, this is where you can have that little bit more conviction. But the most important thing about a trade like this is now that you're in from up here, when it moves down to 61, as you will see in a moment, and then get this very quick flick back up, because the idea of the trade is to get the break of 61, you're not then going to run away when you get this flick back up that we'll see coming in a moment. So there we go, we traded 61. Holding around 61, this is absolutely fine. So at this point you're thinking, yep, all good. This move can keep on going. We trade 60, still looking good. So whilst below 61, you're quite happy with this. Now, for anyone selling the trend and the level, they're now selling 61. So this is your first entry. It's got a little bit more jittery, it's got a little bit more energy in it now. We're trading down towards 59. This could bring in a little bit of chasing as well. If you're short, however, from 64 and 3/4, you're fine with this. Wouldn't be a situation where you're going to move your stop straight away down. What you should be looking for here is effectively viewing, and people talk about free trades, viewing the bit that you're on side there from 64 and 3/4 down to 61. That is your free trade, if you will. You're on side. You should be willing to give that up rather than selling 61 where you've now got a potential stop up at 65. Now, if you're short from up here, the worst that's going to happen, you end up with about a half handle loss. Not a bad result. And so that's the bit that is your free trade, that you can now kind of give that up if the worst happens and we go back up. Otherwise, you're using the position that's on side now to try and stay in. So rather than running for the exit, and we'll see it in a moment, you'll get this little flip back up towards 62s. Rather than looking at this as a, oh, I don't like it, get out, this should more be viewed as a chance to sell for a further continuation down. We have stalled this just here. Unfortunately, this is stalled, which is a shame. So the point here though is you're now in. You're in from up here. Even with this little spike back up, that's just a test. And when it doesn't get back to 64 and 3/4, this has now shown you that the sellers are able to win this battle. That then sets up the further move down. And this is where, think of it from this point of view, this is where you're going to get paid. Don't give up at the point that you're about to get paid for something. You've done the hard work in getting in here, in recognizing that as a potential entry from your shorter term chart. You've done the hard work. Stay in through 61, and then you can start looking down towards 47 before making a choice down there as to whether you should still be staying in or whether that's your exit point.